Welcome to the deep dive. Today we're digging into Bullish's latest Q2 earnings and what's ahead for them. They've hit some big regulatory milestones too, so lots to unpack. Okay, so diving straight in, Bullish's Q2 financials, adjusted revenue came in at $57 million. Right. Now that's actually down a bit, 8.7% quarter over quarter and 6.1% year over year. Seems like low Bitcoin volatility was the main culprit there.
Yeah, that tends to impact transaction revenue quite directly.
Exactly. But here's the interesting part. Their subscription services and other revenue, the SS&O, it hit a record high.
That's the key takeaway, I think.
It's now 45% of their total adjusted revenue, came in at $32.9 million. That's a huge jump, 61.4% sequentially, 27.4% year over year.
Massive growth there.
And adjusted EBITDA was $8.1 million. Now, the market saw some dips initially after hours, but then the stock actually recovered pretty fast, trading up over 10%. So what does this big shift towards SS&O really tell us about their strategy, in such a volatile market?
Well, it's precisely that, isn't it? A strategic pivot. When we talk about adjusted revenue and adjusted EBITDA, we're really trying to see the core health of the operations.
Right, stripping out some noise.
Exactly. You take out things like non-cash charges, those big swings in digital asset values that can kind of mask how the actual business is doing day to day. That's why it looks different from the reported net income, which was, $108.3 million. That includes all those market movements.
Okay, got it.
So this booming SS&O revenue, it's a really clear sign they're building resilience. It acts as a counterbalance, to the unpredictable transaction fees. It gives them a more stable, recurring income. And honestly, in this space, that's critical for long-term survival, and getting that institutional buy-in explains why the stock bounced back, I think.
Yeah, that makes sense. Building a stronger foundation. So how does that foundation translate into their forecast for Q3? This guidance seems pretty optimistic, building on that SS&O strength.
It absolutely does. The Q3 outlook they shared suggests they expect these strategic shifts to really pay off soon. They're projecting adjusted revenue to bounce back nicely, somewhere between $69 million and $76 million.
That's quite a jump from Q2.
It is. And adjusted EBITDA is expected to be significantly higher to $25 million to $28 million range.
Wow.
And SS&O, that star performer, they see it climbing further between $43.5 million and $48 million.
So continued strong growth there.
Yep. And adjusted net income projected between $12 million and $17 million. It's a definite upward trend they're signaling.
Okay, so what's really driving this optimism for Q3?
Well, several things are feeding into that. One big piece is their stablecoin liquidity services. They're expanding there, and notably, they kicked off a new collaboration with Solana back on July 1st.
Solana, right.
And this isn't just, a name partnership. It's about providing that deep, reliable liquidity that institutions need for stablecoin operations. Think settlement, large trades.
The plumbing of the system, essentially.
Yeah, pretty much. Then there's the regulatory picture globally. It's getting clearer. You have MiCA in Europe, things happening in Hong Kong. Paradoxically, these rules are actually encouraging institutions. It gives them the certainty they need to commit long-term to platforms like Bullish that are, playing by the rules.
So regulation as an enabler, not a blocker.
In many ways, yes. For the established players, anyway. And of course, the IPO proceeds definitely help strengthen their balance sheet, giving them capital for returns and more strategic moves.
Right. Regulation seems key. And speaking of regulation, let's talk about the big news confirmed just yesterday. The New York DFS BIT license.
Huge news.
Yeah, for anyone following this space, we know that's a tough one to get. But what does this really mean, especially combined with their other big licenses, this quad factor they talk about? How does it help them attract the big institutional money?
That's a great question, because it's about much more than just a rubber stamp. The BIT license is notoriously difficult to obtain. It's one of the highest regulatory bars globally for crypto. Getting it means Bullish can now operate fully compliantly in New York, a massive financial center. And when you add that to their EU MiCA uplift, their Hong Kong SFC license, you get this quad factor, as they call it. It basically creates a significant competitive advantage, a moat.
Okay.
In a market where trust and compliance are absolutely everything, especially for institutions, holding these top-tier licenses signals a kind of flight to quality.
Right. Institutions need partners they can trust who meet their own compliance hurdles.
Precisely. They'll gravitate towards platforms like Bullish that have done the hard yards on regulation. It's incredibly difficult and time-consuming for competitors to replicate that.
And this bit license, obviously, it unlocks the U.S. market formally. They're saying a launch is
Yeah.
imminent. But they're also being cautious about initial volumes because of client onboarding times. Given they already have a global order book, what are the actual hurdles in onboarding U.S. clients?
Yeah, that's the interesting part. Usually a new exchange faces the cold start problem, right? No liquidity, so no traders come. No traders, so no liquidity builds up.
The classic chicken and egg.
Exactly. But Bullish kind of sidesteps that because U.S. clients will immediately plug into their existing global liquidity pool. So liquidity isn't the issue.
Okay.
The challenge, as they mentioned, is the process of onboarding itself. The KYC, the AML checks, legal reviews, technical setup for big institutions, that stuff just takes time. 2 to 6 months isn't unusual.
Right, the operational mechanics.
Yeah, so they're working on streamlining that using their global experience, but it's inherently detailed work.
Okay, let's shift to some of those strategic deals. The multi-year agreement with Igloo Inc., the company behind Pudgy Penguins.
Ah, yes, the Pudgy Penguins deal. Quite interesting.
Yeah. I mean, for listeners in the Web3 world, Pudgy Penguins is a huge brand. Global IP, toys, and their Ping AU token has like a $3.5 billion market cap. This feels bigger than just listing a token.
It absolutely is.
It seems like a convergence of brand, community, finance. How does Bullish's one-stop shop approach cater to someone like Pudgy Penguins? And what does it signal more broadly?
It's a really prime example of their cross-sell strategy in action. It's not just about providing a market for the PNG Hue token.
Right.
It's about offering the whole suite of services that a modern digital brand like Pudgy Penguins actually needs. Think about it. Managing the token, sure, but also market analysis, understanding holder behavior, maybe exploring future financial products tied to their IP.
Using the CoinDesk data and insights side.
Exactly. Integrating CoinDesk, the exchange, maybe advisory. Bullish becomes the underlying infrastructure partner. It signals a future where these platforms are more than just exchanges, they're full-service partners for these digital native businesses. And it also shows that even leading Web3 projects are seeking out these mature, regulated platforms, another aspect of that flight to quality.
And sticking with innovation, let's talk CoinDesk. It's really becoming a powerhouse in its own right.
Definitely.
CoinDesk Indices now has $41 billion in assets under management. That's up $9 billion just in the quarter. They launched CoinDesk Overnight Rates, CDOR.
Which is really important for money markets.
And then the huge news, literally during their earnings call. Grayscale's CoinDesk 5 index product got SEC approval, expected to be the biggest multi-token ETF out there.
Incredible timing on that one.
Right. So CoinDesk is way more than just news now. How does this whole ecosystem, information, data, indices, help the core exchange business? And what's the significance of that Grayscale ETF approval?
It's fascinating how synergistic it is. CoinDesk's services, the indices, the data, the insights, they generate revenue on their own, yes, but they also feed directly into the exchange business.
How so?
Well, institutions don't just need a place to trade. They need the research, the benchmarks, the data to make decisions and manage risk. CoinDesk provides that. CDO, for example, that overnight rate. It's like a foundational benchmark, kind of like LIBOR was for traditional finance, but for stablecoin lending. It brings needed transparency.
Okay, standardization.
Exactly. And the Grayscale ETF approval, that's massive. It's a huge step for multi-token crypto investing for institutions. It gives traditional investors a regulated, easy way to get diversified exposure to top digital assets, not just Bitcoin. That's going to pull more institutional money into the space and likely into products using CoinDesk indices.
And we also need to mention their options platform. They're aiming for a full launch in Q4, currently testing with some clients.
Right, the risk-limited mobilization phase.
Options in crypto have been kind of a smaller market compared to spot trading historically. What's Bullish's play here? What's the potential?
You're right. Options have been smaller, maybe just a few % of spot volume, but that market is growing incredibly fast. Volumes apparently nearly doubled in August.
Wow.
Bullish's strategies seem smart. They're not just launching any options platform. It's specifically targeting institutions. Low cost, yes, but critically, offering things like portfolio margining.
Ah, that's key for sophisticated traders.
Absolutely. It lets them manage risk much more efficiently across their positions. In TradFi, options can be, 25% or more of the volume of linear products like futures. Bullish is positioning itself to grab a big slice of this growing crypto options pie by offering that institutional-grade infrastructure. Bridging the gap, really.
Okay, and one last point. Pricing optimization. They're adjusting fees based on client type and activity, focusing on revenue, not just raw volume. And They say they're seeing a result in Q3 already.
Mm-hmm.
In such a competitive space, why is this shift important? How does it affect institutional clients?
Yeah, this move towards optimizing the spread, it's quite sophisticated. It shows the market is maturing. It's not just about being the absolute cheapest anymore.
Like a race to the bottom.
Exactly, which often doesn't end well. Instead, Bullish seems focused on what they call determinism, basically, reliable, predictable trade execution, also the breadth of services offering the whole package, data, custody, etc., and crucially, regulatory assurance.
The trust factor again.
Right. It signals that institutions are valuing reliability, comprehensive solutions, and compliance. Maybe even more than just saving a tiny fraction on a trade fee. They'll pay a fair price for a premium, trustworthy service. That should lead to healthier revenue for Bullish and ultimately a better overall service for those clients.
Okay, so wrapping up our deep dive on Bullish. We've seen real resilience, driven by that diversified revenue, especially the surge in SS&O.
Definitely.
The strategic push for top-tier regulatory licenses, like the new BIT license, is clearly opening doors, particularly in the U.S., and building that competitive moat.
Critical moves.
And there's an exciting pipeline, CoinDesk's expanding influence, the Grayscale ETF news, partnerships like Pudgy Penguins, and the upcoming options platform. Lots happening.
Indeed. It really makes you think, doesn't it? With regulation evolving so quickly and institutions getting more deeply involved, how might traditional finance itself be fundamentally reshaped by all this, by blockchain tech in the next few years? What other surprising integrations between TradFi and digital assets might we see that maybe we haven't even thought of yet?